Consistent growth from corporate America and from the labor market could spur stocks higher. Larry Short, portfolio manager and executive director of private client group DWM Securities, Inc., joins us via Skype. Good morning. And what are your thoughts on the second half of the year?
Pleasure to be here. Well, if you remember last year, we were talking about how I expected that after the U.S. presidential election, we'd start to get the market move up. We'd start to get long-term interest rates also start to move up, which means that bond prices were going to start moving down. And indeed, that's the way that it's unfolded quite nicely. So the market has made a really nice run, and I'd like to see it continue, but it all depends on really the reaction that clients are going to have when they open their June statements.
What do you anticipate you will hear from clients about their statements?
More than likely, the calls are going to come from bond holders first, because bonds have had such a terrific run over really for the last 18 years. So this fall that we've had recently has been very rare. We've only had it happen in 1994, in 1999, in 2004, where bonds have come off quite significantly. And that, particularly for investors these days, they're not used to seeing bonds fall. So indeed, if they do start to call their advisors and then start to see that, in fact, the stock market has gone up, we could see what's called that great rotation, where money starts to move from the bond market into the stock market.
Do you see signs of a summer rally?
It looks like the market wants to move back up into a nice summer rally here. Again, the odds are in favor of doing that. It's certainly not something that's definite, but we do anticipate that the markets will be higher come early August than they are now. Now, that being said, we always go into that worrisome period in September, October. 17 out of 20 years, the markets tend to be lower in September and October than they are in June, early July. And we think that would set up for the next run running into 2014.
One last question. Where are you putting your money?
Definitely eyeing commodities in general, and the reason being is that if indeed we do have this improvement in the U.S. economy, Japan starting to pick up, growth happening in China, maybe not as much as we'd like, but still some decent growth happening. Auto sales picking up nicely. At some price point here, commodities have got to start participating.
Thank you. And again, that's Larry Short. Thank you for your time.
My pleasure.